My name is Danny and I will give you the webinar today. So like I said, this is the beginners online trading webinar. I will explain what will happen in the webinar before we will begin. So we will have an idea what we are going to. First, we will open with a quick introduction to the company, what kind of features and functions we have here in this facility that can assist us making progress. We're also going to discuss some of the things, just a second, that you can find only here. This platform, of course, I will elaborate more about it. This platform is called the Web Trader. Okay, we're going to have the webinar on that platform. On the second part will be more practical, so we will discuss logic behind certain decisions. What does it mean buy and sell, and how do we make profits, and how we, God forbid, we can have losses, and so on. And lastly, we can have analysis if time will allow us, and we'll have some spare time at the end. Okay, and it's important to know that any capital markets and trading information disclosed in this webinar is provided for informative purposes only. It should not be constructed or applied as an investment advice, recommendation, or a suggestion. Okay, now, as I said, this webinar, I haven't said that, but this is a good time to say that this webinar is recorded. Among all of our other webinars, you can casually find our recordings in our YouTube channel and review them again in your own speed for your convenience. Okay, so this webinar is recorded as well, and I would like to take a brief look to make sure that everything is as it's supposed to be, and then we can hit the road. So I'll be right back. Thank you very much. Okay, it seems fine. It seems like everything is okay, so we can simply begin. We're just going to get ourselves a nice place for the notes. Okay, so like I said, I'm Danny. This is a live webinar, guys. Feel free to use the question section all you want. If something is not understood or you want me to recap, feel free to do so. Okay, this is the beginners online trading webinar. It's called like that, but we're going to have some essential tools that can be definitely useful for intermediate and advanced traders as well. Okay, so to begin with, as you know, we are a regulated company. AvaTrade exists since 2006. We have 9 licenses worldwide. Our customer service is here at the bottom left. Like I said, this whole interface is called the Web Trader or the AvaGo, and there is no need to download or install anything to access that. Okay, you just click on Web Trading, sorry, and unless it looks like that as soon as you're logged in. Okay, there are 2 options. You can access it from your personal area after you're logged in, or you get straight to here, and that's fine. Also, to get back to here, you can do it from any other really page that you are at. Let's say that you are here and you want to get back to the chart. All you have to do is just to click on here, AvaTrade. You're back. Okay, very simple. So in case you have a question or anything along your journey, you can access the customer service at the bottom left, okay, to access the chat or the WhatsApp. And if it doesn't look this way and you just want to contact them directly, you can just send an email to avatrade.com. Okay, cs@avatrade.com. This is for customer service. And for trading, we have a senior account manager that can be assigned on your file depending on your eligibility. First, you have to make a deposit and then start moving. Then you can ask for a senior account manager, unless he already contacted you before. Okay, I apologize. No, that's completely fine, Kuma. We are just having an introduction. We didn't really get to the business. It's completely okay. So as I was explaining, customer service can assist with customer service. Senior account manager can basically assist with everything that it's related to trading or your account. So basically, trading plan, trading strategy, right? Calculations. What else? Risk money management, everything you can think about, analysis perhaps. Okay, a senior account manager is there, okay, to assist you with that. Now, I would like to mention some other platforms that we have. So we have the web, we already saw that. This is the web trader, okay? The AvaGo is the same, similar interface, just on the app. Okay, because this is the desktop version. Okay, and AvaGo looks very similar, but just on the app. Okay, all right. Beside that, we have MetaTrader 4 and MetaTrader 5. Okay, which are also excellent platforms. We also have Ava Social and Ava Options. Now, as you guys already know, I don't usually go too far with Ava Options and Ava Social because this is not the webinar for that. But because this is a beginners defined webinar, I will speak about Ava Social just to understand the idea of how it works. So Ava Social, what it allows you to do, it's two unique features. Okay, are to follow and to copy. When I'm following someone, I can just pick a trader from the lists. And what will happen is I'm just going to get notifications from the traders that I'm following, not from the trader that I'm following. He's not sending anything. The app is sending it automatically to me. And by following someone, I can either keep it in my sheets, I can execute it on the spot if I want, I can modify my position. Maybe he took a certain position and I can use it as guidelines. Okay, as an example, when I'm copying somebody, so that works exactly as I've explained, plus the execution has been done automatically. Therefore, I will be trading, I will be copy trading. I'll be linked my account to his account, and then it will work automatically. In here as well, you can make the adjustments to the lot size and make comparison to see that you the balances might be different, but you can still adjust it to be more computable, if it makes sense. Okay, I believe there is a markup for that as well, but you can download the app and see in your own eyes. Again, I don't want to get into depths with that now. This is, I think this is pretty much, oh, I have options again. I don't want to waste too much time on that, but I can just tell you that the app itself is remarkable and I highly recommend you to try. Let's put that, let's keep it this way for the time being. Although I wanted to show you one of the features. Okay, let's put that aside from the others. So what I'm going to show you guys is only on the web trader and the AvaGo. Okay, let me launch it. So the product that I'm going to show you now is called Ava Protect. Okay, I've picked gold for that. Ooh, there are all kind of nice things here, but let's get rid of that for the time being, and let's simply demonstrate with days. I guess days, it's not bad. Okay, so the features that I'm going to show you now, the feature is called Ava Protect, and what it allows you to do is to protect your position for a certain time frame. Okay, let me put it down this way. You can also, you don't have to remember that, because just pointing on that circle here, it's already showing you the definition, right? But I'm just putting it in my own words to understand the idea in a nutshell. Ava Protect allows you to protect the position for a certain time frame, and whatever you lost during that coverage, you will get back. There is a fee when using the service. What does that mean to use the service? As you can see, there is a box here next to Ava Protect, and you have the golden shield here. They both do the same thing. Okay, I can click it. See, I can deselect from here. Let's do it again. Okay, I select, and it allows me to protect the position. What does that mean, to protect the position? What exactly do I need protection from? I thought that we're here to make money, right? Trading is all about making money, correct? But there is also, we can also lose, okay, sometimes. And what this unique, incredible product allows you to do is to protect your position up to, okay, you saw that this timer has opened when I clicked on the box, right? I want you to see what happens with the fee. So as it says here, it lets me protect the position for a certain time frame, and that's wonderful. So what happens when I extend the time length? Okay, so this is 1 hour, it's 33, 3 hours is 49, 69, 1 day 95, and 2 days is 117. Now, this fee is something that I have to acknowledge before I'm opening the position. Why? Because I'm going to show you now the potential scenario, what can possibly happen if I'm taking this position. Okay, what can be the potential results? And I'm going to use take profit and stop loss to simulate the amounts. Okay, therefore, because we are with a buy, our intention that value will increase in its value. Okay, that means that from here we wanted to get to, I don't know, here, and then to here can be our perhaps our stop loss. Okay, now let's put it this way, and watch what happens if I don't check the fee before I'm taking the position, right? So this is what would happen. Don't worry, in a minute I will explain to you exactly what is take profit and stop loss. Okay, what do you think about that comparison? Is that okay? Is it worth for me to do? To pay a fee of $117 to make $76, or to, for God forbid, to lose 83? What do you think? Is this a good comparison or not? Terrible. Okay. Why is it terrible, Mike? Also, Mr. Amit also wrote no. So why, Mike, is this terrible? I'm going to get my losses back, right? This is what it says here. I'm going to get my losses back. But the problem is that the fee is bigger than my loss. So what's the point using this product at all? Okay, I need to make this comparison to the time, to the time length, and I want to know. Oh, just a second, something here has changed. Yeah, and I want to know that it's worth my time. So, for instance, if let me just break it down for you what the take profit and the stop loss. So, because for people to understand. Take profit, what it does is a price that I asked the platform to remember, and it closes my position with a profit. Stop loss, if it gets to it again, it's going to stop my position from losing further down, okay? Because we are with a buy. If it would have been the other way around, what would happen is my take profit will be lower, my stop loss will be higher. Okay, so basically when I'm buying something, my intention is that the value will increase. When I'm selling something, my intention is that the value will decrease. Okay, the other way around means losses for both cases. Okay, now, so what can I do? For instance, let's say if I cover it for 1 hour, it costs less, right? That makes more sense. But let's suppose that I want to keep it for 2 days. So for that scenario to make sense, to be worth for me, let's take it $10 higher, and let's take that $10 lower and make the same comparison. Okay. Still, it's not just a second. Our line just disappeared. Okay. Right, and then okay, so that makes more sense. But again, this is not really something that I would enjoy the product to its full extent. Okay, the point here is that if I lose a big chunk and I pay 117, is obviously it will be worth for me. Okay, I don't know if it can get all the way down, and I'll be honest and say it doesn't really matter if it gets all the way down, but if I lose much more than the amount that I've paid, it's already worth for me to use the product. Okay, at least in my opinion, everybody can use it as they want. As I said before, you can also adjust it. One more thing that I want to show you before I carry on to the next thing is that not only the time length determines how big the fee is going to be, right? What can also change it is the lot size, the quantity. So if right now, if it would have been like that, so it would have cost me $4. If I extended to, look, I'm just gonna click here on the plus. Okay, so it makes it bigger. If I take it all the way up to 0.01, sorry, 0.1, it will be 10 times more. Yeah, that's very simple. Okay, do we have any questions about this product, about AvaProtect? Its functionality, the fee, what I said about the comparison, maybe anything you would like to ask, guys, before I carry on, because I want to move to the next feature. There's a question here. Please explain what does value means next to the margin impact. So first of all, Mr. Amit, thank you very much. Okay, I'm going to remember that. Hopefully, I'm going to remember that, and I'm going to explain about that in roughly 10-15 minutes. Okay, but I'll get to that. Thank you for reminding me. Okay, so this can be found on the app as well. As I said, this is the web trader. You can find it on the app. Just look for the golden shield, and it's activating the product. The next thing that I'm going to show you is actually the news. Let's watch this news section. It's very efficient by Trading Central. Okay, what this section does is actually allowing us to enjoy pieces of information regarding different subjects. Okay, marked by a certain date. Okay, and where it came from. And the unique thing about, well, in here it's oil and it's only showing oil. The unique thing about that section is that sometimes you can enjoy a variety of assets, diverse assets from the same article. Okay, could have an impact. This article could have an impact on oil and on gold and on Bitcoin and on USD CAD as an example. This one, well, it's only US 500. This is, see, that's nice. Euro USD, NZD USD. Yeah, it's worth. You can focus if you want something in particular. You're more into stocks. Okay, that's very helpful for fundamental analysis. Second thing that I'm going to show you, or maybe the third, can you call it second or third, whatever you want, is the market buzz. Okay, and that can show us what assets are more fluctuative. Okay, which stocks are more fluctuative that we might want to focus. Okay, USD Bancorp, we have Nvidia, Microsoft, Apple. What else? Tesla is not as big. Yeah, but you can just play with it. You can play with it, and then perhaps you have a hint what's worth your attention analyzing. The next thing that I'm going to show you is the economic calendar. okay, which we can filter as well, and that's by either how big the impact is, as an example. So we have low, medium, and high. We have holidays, economic events. I can pick a particular country, well, currency and country, right? I'm looking at the US news, so it will obviously have an effect about the dollar. So if I'm trading a certain currency, or maybe even two, I can go with Aussie as an example, and let's say UK, okay, as an example, or with New Zealand as an example. Okay, Aussie and New Zealand and UK, right? As an example, it's going to show me all of those countries, only those countries. Okay, I can take out New Zealand as an example, and I only stick with the Aussie and the pound. Okay, second thing that I can do is if I want to only focus on the major events, I can click here on the high, and then it's showing me all the major events. Okay, I can choose a particular range if I want to analyze ahead and see, you know, what's upcoming, and I can look for a particular event. If I want only, let's say, the NFP as an example. So, oh, it's not farming, I believe, right? Here it's a bit different. Oh, we don't have that because we are it's a US report. Of course, it's not going to find it. Let me do it this way. Nothing else is marked. Okay, and then we have this particular event, all its previous and summarized result. We can have we can add it to the calendar. We can have the event chart. We can see the price chart, okay? Anticipated changes. The way that it's presented is we have the previous result, so that's what happened last time. We have the forecast, which is what we expect to happen, and we have the actual. Obviously, we're only going to have that after the occurrence already took place. Yeah, we're not going to have that before. Yeah, this is pretty self-explanatory. I don't think we really should delay ourselves on that, but it's very useful. You have to agree with me. It's lined up very nicely. We can use it, utilize it very efficiently. Guys, do we have any questions about that? This is also very helpful for fundamental analysis, right? Things we should know. Any questions? Any questions, guys, from any kinds? Otherwise, I would like to move to the second segment. Okay, we have a question here from Matthias. In different strategy, what would you recommend? I'll have to say, Matthias, that okay, so just for everybody else to know, Matthias here is asking out of the different strategies what I would recommend. I'm not sure that I can answer it to you right now because I don't recommend anything specific. I recommend a strategy that works. You can make money with it. You can understand it and do it consistently. I know with as funny as it sounds, all strategies are okay, but it depends on you. It doesn't depend on strategy. We have a question here from Wessel. I hope it makes sense what I'm saying. I hope. Okay, earlier you mentioned. Okay, what does that mean? DML. DML? Are you sure, Wessel? Did I say DML? I'm not really sure. If you can remind me what it was related to, then it could help me remember, because I'm saying and doing a lot of things through the webinar. If you can remind me, that will be great. To begin with, oh, okay, you're asking what I would recommend to begin with. Which strategy to begin with? Okay, we have Wuzzle here. That's what I heard you while you speaking about Ava Protect. DML with Ava Protect. I frankly, I don't know. Maybe I'll go through that as well. Let me see. Just a second. DML. What I said about the stop loss and the take profit is I can place them to simulate the potential results, right? So I don't know what DML you're referring to, but usually I make a comparison to the feed to see that it's worth for me to take a position and I don't end up paying a bigger fee than I could lose. Then it's pointless. Okay. All right. Okay, we have a question from Kuma. Will it be exactly the same real and demo account when you're trading with a demo? Yeah, it's supposed to be the same. Yeah, I don't think there should be a difference between the demo and the real account. Now, Matthias, to recommend you on a strategy for a beginner is also something that I can't do, because strategy is depending on, let me put it down. Okay. Right. What is important to have in your strategy, right? Time that you can manage, profits, suits to your goals, right? Risk money management, exposure, all those things, okay? They are depending do we need to pay fees on all and every time we place trading? This is a great question, Kuma. I'm just gonna show you now how it looks like. Okay, it's very, very simple to know that. And earlier I saw corn was very interesting, so I'm gonna show you that now. All right, so we officially begin the second part, guys. Okay, I'm gonna bring up corn through the search field, but I also actually, let's search it manually so you'll understand the idea. I'm gonna click here, okay, on the two tiny arrows to make it go down. And then I'm gonna scroll down to commodities and then agriculture and corn. Okay, oh, it even has a signal here. Not bad. Okay, we're gonna expand it back again. And to your question, Kuma, the spread here, which is the difference between the bid and the ask, is actually something that I pay as soon as I open a position. Okay, so that means that instead of starting flat with 0, okay, I will have some sort of a minus. How much? So this is 0.75 for a unit. What happens if I take one lot? Okay. Yeah. Okay, very simple. As you can see, the idea here is very simple. Let's take gold as an example. Okay, see, so for gold, okay, we're gonna give it a moment. Yeah, okay. Now, the other fee that we have is called overnight fee. What is overnight fee? The swap. So how do I know how much I need to pay if I'm holding it over a night, more than a day? I'm gonna click here on instrument details, and at the bottom it's showing me, first of all, it's showing me here very nice things. You see the lot size, the hours that it's open and I can trade it through, the spread, we already saw that, the leverage is there as well. And this is my overnight fee, okay? This is my overnight fee. The way that it works is it's based upon a certain value. Okay, this is out of the value of my position. Okay, in a minute I'm going to show you what the value is. It's calculated annually, it's charged daily, and it's deducted only when you close the position. Let me repeat that one more time. Our value, excuse me, this value here is the value of how much my position is worth. So calculated annually, that means that out of this, the percentage that I'm taking will be divided by 365. It will be charged daily. That means that on my positions, I'm going to go to my positions, it will show me swap equals X, okay, per day, but it's calculated, as I've explained, annually, and it will be only reduced from my balance when I close the position. Yeah? Okay, I'll see the minus growing every day that I keep holding it, and then eventually when I close the position, it will be deducted from my balance. Okay, the calculation is done annually. And now, I hope it makes sense. Who asked me that? Oh, Kuma, right? Okay, I hope it makes sense. Now, how do we close the position? You just go to the position. You have here an X. You click on the X. It closes the position. Will I need to pay even I lose or win? I'm not. Oh, okay. You're asking if the fee will be charged anyway. Yeah, the answer is yeah, Kuma. When you open a position, the position will be charged with the spread. Okay, regardless if you make profit or loss. This is why in order to make profits, first we have to cover the spread. Okay, that's how it works. It's a very important question. Now, where was I with with the strategies? So okay, do we close the position manually even though we used take profit and stop loss? Oh, no. I thought your question was how do we close the position? Well, if you're using it automatically, it's going to be closed automatically. If you're not using take profit or stop loss, it's not going to be closed automatically, and you'll have to close it unless you haven't met the margin requirement, but we'll get there. What will be certain percentage of according to my balance, the overnight fee? You can find it here. Kuma, you can find it here. Okay, it's right here. It's right here. You have it for a buy, you have it for a sell. This is in percentages. Okay. Yeah. All right, guys. I wish to carry on. I hope it makes sense, but we have to move on. What was the question with Matthias? Oh, right, for beginners, strategy for beginners. So what I wanted to tell you is that the difference between strategies, and this is something we have to comprehend. A strategy, whether it's for a beginner or not, still need to match my ambitions. If I'm a busy person who work full-time and I have I don't know, many responsibilities and kids and everything, I can't use a strategy something doesn't make sense, right? I can't use a strategy that requires me to sit 10 hours a day. I can't, okay? Even if it's the most successful strategy that there is at the end of the day, right? So whenever people asking me, what do you recommend? So I recommend something that works for you, yeah, in terms of time management and so on and so on. Even if it's small, even if it's once every, as long as you can commit to it and you can do it systematically. Okay, I hope it makes sense, Matthias. And there are thousands of strategies, thousands of strategies. Make a good trading plan, find your own strategy, and it can be the best as well. All right. Let's get down to business. So we have corn. Okay, all right. We're gonna write down with pleasure. With pleasure. I'm happy that it helped. I'm happy that it helped. You wouldn't ask, you wouldn't know. It's good. All right. So we're gonna write down here. We're gonna write down the first thing is target, then time, then movements, then units. Is it the same with the indicators? Yes, yes, exactly. It's the same with the indicators. It's the same with everything you're using. Everything is the same. The analysis, the averages, everything. As long as you can use it. Okay, I'm interested in option trading. Just doing option trading on strategy. Download the app. I would recommend you, Mr. Kuma, to download the app. Download Ava options, and there you can trade options. In here, unfortunately, you can't do that. And you can find many videos on the website, many tutorials by Stephen Reiter. He's amazing. I'm sure you can manage. All right, so we have here 4 ingredients: target, time, movements, and units. Why did I write them down? Because right now, if I'm going to take the position with a buy with corn, do I have any estimation of how much money I can make, how much money I can lose, what prices I should close that, how much money I'm using? Well, basically, I know that here, but all of the previous questions, I have absolutely no idea. In other words, even if I take a buy and it goes up, right? How can I know? How can I know how much I can make, how much I can lose? So to plan the position, to have a healthy composition, to do that, to be able to manage my position properly, I'm going to fulfill this few ingredients just to have an idea, okay, that the expectation to what I'm planning to do is really going to be okay. Okay, that means that I'm going to be happy with the money that I'm going to make, and my exposure can be adjusted as well. Okay, let's begin one by one. Okay, let's first, it could be a little higher. Okay, just a second, guys. Okay. Don't worry, there is no need to know what I'm doing now, because we are going to begin with a guide through first, and then we'll have better understanding. Okay? Okay. There are many questions, guys. Unfortunately, I can't give you an answer for that now. So just bear with me until I'm done with the guide through, and then I'm happy to keep answering your questions. Yeah, so as I was saying, I need an estimation what I can expect. Otherwise, even if I take a buy, there is a chance it will turn around. So how do I know that? Let me just show you. Right now, we're looking at days, right? So this is daily candle. Every candle here is a day. Okay, what happens if I'm looking at minutes? You see the direction keep on changing. This is 1 minute. Look how many times the direction has changed just in the past few minutes, right? So the direction without to specify some kind of length I'm expecting to happen or something like that is pretty futile, right? I can take a buy. Look how fast it can turn into a sell. Okay, so what can help me indicate that is to have an idea what to expect in terms of support and resistance. I have certain levels on the chart, okay, certain boundaries. I don't want to call them boundaries, but this is much more preferable. You know what? Let's keep it this way. All right. A question here. Do you have called? This is not something I can answer about right now. This is too. It's gonna take too much time, guys. I apologize. I have to carry on with this. Maybe at the end I'll give you an answer. Okay. Right now I want to do a guide through about the toolbar here, so we will know what I've used to place those nice lines on the chart. This is the you saw me changing. I changed from days to minutes. I have other things here as well, weeks, months. I have this thin light toggle that I can click and drag. I have here the candlesticks, which I can make it a line or keep it as candlesticks. I can change here the crosshair, and this is something I must do when I'm doing technical analysis. Why? Because without that, I don't get any data from the candles. I literally have no information from the candles, right? Therefore, to analyze the candles, to get the information, I have to change it from no crosshair to crosshair. Then when I hover around the candles, I have here the rectangle at the upper left, and I can see here the date, the open, the high, the low, and the close of each and every candle, okay? Here I can change the layout to have two charts, and in here I have it completed. Here I can add an indicator. It's less relevant for us now. And now we are looking at corn. So we said that the buy by itself or the sell by itself can change in a minute. So still, how do I summarize where it can get to? Okay, or what price I can close it at? Now, the first thing to begin with can be obviously a target. Let's say $1,000. Why? Because if I took a position and I go here to the positions and I see I've made $1,000 profit, I can just close the position. So this is one idea where I can, what price I could potentially close the position. However, even if I get the price, how will I know that it's sufficient for me to make 1,000? How can I know? Maybe I can get to here, to here. How can I know that? So we have a target, and we are going to examine the potential movements for corn to move per day, right? We're looking at days. Let's set the time length to days, okay? 1 day. It's a bit ambitious because we only have $10,000 to try and make 10% in a day, but just for the sake of the example, okay? Now, how can I know how corn can move? What's the tendency for corn to move per day? Okay, so one of the things that I can do is I can simply subtract the open from the close, the high from the lows. Okay, this is the 21st. Yesterday, right? From us. Okay, and we let's go with open, close, high, and lows. Okay. And then we're gonna put down the numbers. Very, very simple. You see it's right here. Yeah. Okay, so the open here is 459.5, closes 457.5. High is 460.75 and low is 454.5. Therefore, if in theory, I subtract those numbers, that means 459.5 minus 475.5, it's $2. Okay, and if I subtract the open and the high and the low, it turns out to be $6.50, $6.25. Okay, now the problem with using this technique is that it's old. Of course, I'm kidding. This is a very good manual checking, but the problem with using only one candle is that it's not valid to use as an average, right? An average is made out of few components. That means that we need several candles to analyze. Means that we're now gonna do this exercise, which takes roughly half a minute with I don't know how many candles. Now, time is on the essence, and we can't necessarily do this with several assets, right? It's too time consuming. Mohammed Bilal, you're asking, will the recording will be available? Absolutely, Mohammed. On our YouTube channel, you can go there and find it, see it in your own pace. Now, let's apply an indicator. Okay, so we're going to click here on indicator, and we're going to apply the ATR, average true range. Okay, and with that, we can actually see the same. You see, we're using wielders. We can actually see the average 675, which matches perfectly with the manual checking that we've done here. So this is how much corn has tendency to move per day. Okay, this is an accumulation of how many candles? 7, right? I've put the length here, 7 wielders, 1 px ATR, and this is how much it can move. Therefore, if I would want to get to here as an example, right, to the white line, 476. Let's see, the current price is 461 minus 476. That's $15 away. Okay, $15 away, but the average is only 6. Okay, what is bigger, 625 or 15? Well, 15 is much bigger. If I want to be in the range, let's see, if I want to be in the range, perhaps I should go with that. 466. How far away is that? 466. This is only $5 away. $5 away. Is it in my range? Absolutely. Absolutely. That's in my range, and I have a reason to believe that it can get to there in a day on average. Excellent. All right. I don't have to take the ATR to its full extent. 5 seems good to me. So $5. And now, how many units I need to buy to make $1,000 with $5 per unit? $5 difference per unit. In other words, $1,000 divided by 5 is how much, guys? How much is it, guys? 1,000 divided by 5. Let's see who's fast. I'm gonna do it with you with a calculator anyway. Let's see who gets it. Very good. Perfect. Perfect. All the people who wrote down 200. Very good. All right, 200. Now, let's see. 200. Let's put that to the test. Let's see that it match. All the number needs to match. Just a second. Okay. So let's do, first of all, let's put $5 away. Where's $5 away? 466. Okay, we're gonna put here 200, yeah, perfect. In here, let's make it the other way around. Okay. Very good. Very good. So we can make 1,000, we can lose 1,000. I'm not so sure I'm happy about that, but perhaps we can adjust it. So numbers make sense. Now let's see regarding the margin usage. If this is a position I should take in terms of risk, money management, and margin usage. Okay. Mr. Amit, you asked me in the beginning to explain about the value, right? So pay close attention. The composition seems okay. It's not finalized. We're gonna see why. It's not perfected. It's just composed. But of course, there are times when we have to make adjustments. I'm gonna show you now what I mean by that. There is something called price per unit, which is that. Okay, we have the bid and the ask price, as we learned. So price per unit times units equals value. Therefore, 461 times 200 equals 92,350. You see, it's written here. Let's do it together for the sake of the discussion. Okay. Second thing is leverage. What leverage does? Leverage does is just a second, is it multiplies buying and selling. Okay, therefore, because we are hypothetically multiplied by 10, I can divide my value by 10. Therefore, value divided by leverage equals margin impact, which margin impact, nothing special happened here, guys. Nothing special. I just took the number here. It's also written here, right? Yeah, this is as simple as it can get. Okay, and margin impact is necessary amount, open the position. Okay. Okay, for instance, if I go for 3 lots, it's not gonna let me do that. Why? Because I don't have this much money. I don't have this much margin, money and margin, yeah. Yeah, Amit, is that clear? Is that segment here clear? Does it make sense? You guys fully comprehend what's happening here with the leverage, with the value? If there's any questions, guys, if there is any thing at all, please feel free to ask. Are there any questions so far? Please explain stop loss and take profit. All right, so I'm gonna go through that just to show you. Now, because 1,000 and 1,000, let's click on that as well. Execute when price hits is another pending order that I can set a price to be exact. And of course, there could be a slippage, but the 461, when price market reach that level, they execute when price hits the 461, it's going to launch the position at this price. Now, can you explain mean actually buy? As I said, guys, this is the potential result, okay? This is very, very easy to understand. This is the potential result. This is the take profit closes the position automatically with the profit. Okay, if it gets to the green line, okay, if it gets to the green line, it closes with the profit. If it gets to the red line, it closes this with the okay. Now, why I showed you that? Because 9,235 out of my 10,000 might not be a wise decision. Okay? I mean the price per unit. Oh, this comparison can be done with any other asset. You can go 0.01 and then expand to see how many units, or you can just put one lot and see, or you can go to here and just see the lot size. There are many ways to know the lot size 2 units comparison. Okay. Now it reset everything, so we can quickly put it back to what it's been. Okay. And now the problem with this scenario is that I can lose 10% out of my balance, which I don't really like that idea. How can I reduce the 10% by half? So I can do one of two things. One, reduce the units. Second, reduce the length. Okay, we called it movements. Let's keep it movements. Now, if I get the stop loss closer, it might be trigger and move to where I wanted. If I minimize the lot size to 1, of course, I'm going to make less profits. I'm going to make 500, but I can also lose 500. Yeah. So you can adjust the stop loss or the units to determine your potential profits or loss. Okay. Guys, unfortunately, in a minute, our time is up. I really hope that this agenda, this technique helped having a brighter, a clear view on the market, how to approach and what to do. I think using those lines can really help you define support and resistance. I wish I'd have more time to explain to you about that, but you can definitely enjoy the indicator as I showed and the lines, and to leave yourself a note if you want to remember a certain area and so on and so on. All right, guys, we are up for today. As I said, I hope that everything here made sense and you learned at least one good thing. Is this webinar is every day? No, it's per week, Kuma. It's per week, this webinar. But tomorrow we're going to have a live Q&A. If you want to join us, that's completely fine. The live Q&A is exactly for that. You can join and ask questions and see the answers on the screen. Next week, next Wednesday, it's going to be the similar concept. It's going to be the beginners webinar. You can watch it again live or see the recorded. And the live Q&A is tomorrow. Live questions and answers. I'm demonstrating on the screen, reading questions, and that's can be very helpful. With a pleasure, with a pleasure. As I said before to Matthias, if you don't ask, you don't know. So the purpose here, sorry, the purpose here is exactly that. All right, thank you guys. Have a good rest of the week, and join us tomorrow for the live Q&A. Have a good day.